What's going on, guys? My name is Ryan Spath. I'm a local realtor and investor here with Keller Williams in Boise in the Treasure Valley. Hey, in today's video, I want to do something a little bit different. So yesterday I was contacted by a potential client and they are interested in purchasing a long-term rental here in Meridian, Idaho. They have 25 to 35% to put down, and their objective with this is to just break even. This is a long-term hold. They want to start stacking homes strategically by one every couple of years with the hopes of in 12 to 15 years they have a portfolio and the values have increased substantially. So without further ado, let's just jump in and see if this is even possible. So if you've been following me for any time, you know that I'm a big fan of homes.com. I think it gives a lot of value, especially for the normal person. You can see what they're talking about on the MLS. If there's potential rents, you can get that information on here. So as I mentioned, this client is trying to stay somewhere between 300 and 400K. We're going to bump this number up to 425, and we're going to assume that maybe we can negotiate a little bit, or we're going to look at the market dynamics and kind of compare what's out there to what the dynamics are telling us and just go from there. So that's why I marked this to 425. We're looking for homes, and as you can see, there's 68 homes in the area. So the first one that pops up, it's this one on Scotini in Meridian. So this guy looks like they've dropped it 10K. It has been on the market for 50 days. Small lot, $30 HOA. So this is, again, why I like homes. You can click on this and see any sort of data that they may be sharing on the MLS. So we're gonna box out of here. And then this guy, I wanna just kind of look at the market data for this zip code. So we can see in this 400 to 500 range, even the 350 to 500, the inventory is pretty tight. There's less than a month of inventory, and the properties that are priced well, you can see here with the days on market, they're going in about a month or less. So being that this guy has been on the market for 50 days, I'm going to take a guess that this might be a little bit overpriced for what it is. Looks like a great starter home, possibly a decent rental. Let's see here. See if we can extract any other information on this guy. Okay, so, I see. So as you can see, this guy's 420. It's used housing stock. And then you have brand new housing stock, 4099. So that likely has a lot to do with why this thing's sitting. You can see this guy's at a different part of Meridian up here, Southeast Meridian, and this one is in a different part of town. And same Meridian, but just a little bit further out. So let's just click on this guy for this. So 409, brand new construction, 3.2, just under 1,700 square feet, 242 a square. 2025 new construction, $58 a month. Yeah, let's use this one. I think this will be a good sample to kind of run with. So let's split this up so we can kind of see what we've got going on here a little easier. Alrighty, so 409, 409,990. This client said they have 35% to put down, so let's just say 30. So this will be purchased as an investment property. The rates are typically just a smidgen higher. We're not going to assume any kind of rate buy down or anything. I'm going to just assume that the interest rate's going to be 6.5%. If we look on here, it's got an HOA of $58. You can see right here. You can see right here. You can see right here. And let's just assume the property taxes are $3,000. We're also going to assume the insurance is $1,200. This is likely going to be a little bit less, but it's always just, in my opinion, better to do these analysis with numbers that are a little bit higher, so that way you're pleasantly surprised at the end versus being sadly disappointed. So now we have our purchase price of $499. We know we're going to put 30% down. Our closing costs are going to be anywhere from 1 to 3%. In this example, I have it at 2.5%. So our total invested capital is going to be about $133,000. So now we just need to figure out how much can this particular property rent for. So we're going to go on a couple places here. Let's see if I can, we're going to use Rent-A-Meter. And on Rent-A-Meter, we're literally just going to pull this address and we're going to paste it in here. So nothing special here. It's in Meridian. Let's make this a little larger, a little easier to see. So let's assume that the rent's going to be $2,200, 3 bed, 1 bath, and we want houses. So we're going to check the rents. We're going to view the pro report. It says our rent may be way too high, so let's dig in and see. So the average is $1,848. The higher percentile is $1,939. So let's look at this. So here you can see is our property, and it's kind of pulling all around the area. So let's just look at these guys that are a little bit closer to where we are and kind of compare. So what I do, I just go to something like Zillow, and I'm just literally gonna copy and paste the address into here. Oh, this is in Kuna. So it's a 3-1. Looks like they actually are selling this, so this may be false information. So it rented for $1,895. Another Kuna. Here's a Meridian property, $1,895 on Pine. So let's see what we've got going on here. Okay. So $1,900 gets you a 3-1, 1,000 square feet. I think our property is a little nicer than this, so I'm not going to consider this one. There's another 3-1, 3-1. Let's do 1.5 or more. Okay, so now we have a totally different analysis. So here you can see our house. So $2,390. This looks to be in the same area. And this was just rented in October, so let's pull this guy. $1,447. Let's check this one out. Okay, yeah, this looks like a CBH home, new construction, right? Comparable product to what we're going to be offering. So this guy was getting $2,390. So I'm just going to note this out here. So $2,390 for a 3-2 $1,447. Okay, so we got that comp. Let's look at this one in the same area. Okay, 3-2, 1,848. It's also new construction. So someone's literally doing the exact same thing that my client's thinking about doing. And this one is 2,400. So we can do 2,400 here. And this guy was a 3-2, 1,848. Square feet. Let's get one more. Here's another one in the same area. So it looks like someone scooped up a few of these properties in this new community and they're doing the exact same thing that my client is wanting to do. Great strategy, by the way. When you buy a new construction, the likelihood of having to replace anything for 8 to 12 years is extremely low. Sure, you may have a random appliance that goes out, some things that are out of your nature or out of your control, but you're not going to have any major repairs. You're not going to replace the roof. You're not going to have to replace the HVAC. Likelihood of the water heater going out. All these larger ticket items, the likelihood of them needing to be replaced is much smaller. So 3876. So this guy's a 3.2, 1445, and it's going for 2390. So 3.2, 1445. Okay. So let's dive back in and look at our subject property. So this guy's a 3.2, 1694. So I feel fairly confident to say that we would at least get 2350, just being a little bit lower than this, just for this purpose. So let's hop back in here and dig into the analytics of what this is going to look like as far as the return of my client's goal of at least breaking even and covering all the costs. So if we put that 2350 in here, now we're going to go to this pro forma side and dig in and look at everything. So we're going to assume right now Ada County has about a 4% vacancy. So we always want to underwrite for this because it's extremely important when you're investing in rental properties. You want to treat it like a business. Yes, this is a new construction property. You're going to have people that want to stay in new housing stock over older housing stock. It's just important from an early start to treat this like a business and save for these things, because let's say someone lives in the property for 5 years and it takes 3 weeks to turn the property. You have to possibly paint it, just different things can happen. So you want to be saving for these things in the future. The management on this, we're just going to assume an 8% management. Management here in the Treasure Valley is anywhere from 6 to 10%, kind of depending on what you get. For single family properties, it's up to the particular investor. I personally have done both. We have paid for this and we've had the tenants manage it, and it can go either way, guys. This is just personal preference. We're going to assume for this guy that the tenant is going to take care of it. So we're going to just remove this one out of here. And then you can see I just have $100 for other, whether you're saving for CapEx, etc. And this is just a really rough estimate of what this is going to look like for an individual investor. So as you can see, just to kind of circle back on everything, we're purchasing this for $409,990. We're putting 30% down. We're going to assume an interest rate of 6.5%. Taxes $3,000, insurance $1,200, and based on the rents that we pulled for the other new construction in the area, I feel confident to say that we're going to be able to rent this guy for $2,350. We're assuming a 4% vacancy, an 8% for management, and then we're just saving $100 a month for capital expenditures and just other items. So with all these assumptions, this thing's not going to make any money. It's going to lose us about $200 a month. So let's plug in, like I said, my client was trying to be between $300,000 and $400,000 accusation price, and they have up to 35% to put down. So let's say they put down the full 35%. See if this changes anything, just a little bit. So all the other assumptions are the same. 6.5% interest, taxes $3,000, insurance $1,200, and again we're assuming that $2,350 for the rent. And then when we look on our pro forma, pretty much we're losing $60 a month. So this is something that may be worth looking into a little bit deeper. What do I mean by this? We're going to want to get more precise tax numbers. We can pull properties that have sold in the neighborhood, like the ones that we use to analyze the rents, and see where their exact taxes lie. And then also with the insurance, this is an estimate. I don't want to say any numbers, but I'm going to take a stab in the dark that this is going to be a little bit less. I don't know, but let's even say this was $900. If we look at the pro forma, it didn't change anything to it. So now at our pro forma, we're only losing 40. So as you can see, this may be something that would potentially be interesting to look a little bit further and kind of dig a little deeper and see if this makes sense for this particular investor. And remember, this person's scenario may not be your scenario. This person is a high W-2 earner. They understand the value of real estate. They know that our Treasure Valley is likely going to double every 12 to 15 years. And they're looking to store their wealth in an asset that is going to go up in value, which is exactly what real estate does. You guys, I hope this video provided some value to you. If this seems interesting and you'd like to talk a little bit more about strategies like this, please feel free to send me a DM. Again, my name is Ryan Spath. I'm a local agent here in the Treasure Valley with Keller Williams Realty Boise, and I'm also an investor. I would love to serve you. I hope you guys have a great day.